Precious Metals Update for Thursday, July the 26th. As we had stated in our last update, we expected the euro to hold in the 120 to 121 and a quarter level, and it did. And the market was surprised today when Chairman Draghi of the ECB came out and said that he would do anything, or that the ECB would do anything, to keep the euro intact, which created a little greater than a 1% rally in the euro to its first level of resistance between 123 and 123.50, and also pushed the gold market towards its first level of resistance between the 1620 and 1625 level. While this gave a short-term buy signal, it is not given the all-clear signal yet for the next leg up in the bull market. I do suspect that we will have some kind of a back off in the gold market, most probably into the 1590 to 1600 level, which would be very, very healthy before the next up leg of the bull market. The fundamentals supporting the bull market have even gotten stronger over the last couple of weeks. Nominal rates in the major countries are trading at negative nominal rates, even out to the 2-year security in the Eurozone, and for sure negative real rates going almost all the way out to the 10-year and beyond. This is only supportive of the precious metals, since they don't pay any interest. There are a couple of caveats here. In the U.S., the Federal Reserve has been targeting the equity prices rather than the economy, since they do not have any major control over the economy. And we've had a short-term rally in the stock market, which may preclude them from acting immediately, which the market would like. However, I do suspect that the markets will turn down again, which will give the U.S. Federal Reserve impetus to start another round of quantitative easing, coupled with ECB easing and the Bank of China, which is easing monetary policy, which should all propel the precious metals higher. We are still in the summer doldrums, and we may remain here for perhaps another 2 to 3 weeks before the really big explosive move occurs in the precious metals in the fourth quarter, going into the end of the year. I suspect that you will not only get quantitative easing from the US and Europe, but perhaps even from other peripheral countries too. The silver market, to me, is the most interesting market, since it has lagged fairly dramatically to gold in this entire corrective wave. And as I stated earlier, we are still trading not far from 60 ounces of silver to 1 ounce of gold, which should be tremendous resistance level. I suspect that once this consolidation period or making a high is completed, that silver should start a rally that will eclipse the rally in the gold market. I still suspect that gold will test the highs that it made last year towards the $1,900 level by the end of this year, if not into the first quarter, and silver should go back towards the $50 level again by the first quarter of next year. My next update will be tomorrow. This is Michael Pinellas wishing you good trading.